Have you ever been curious about how your financial situation compares to the norm? How much money do people usually put away for old age? How does your yearly salary stack up against the average? In what ways are you planning to spend your money? Looking at these numbers can help you better understand your situation and determine if you are financially ahead of the average person. Keep reading because you might find some of these revelations shocking. Welcome back here at Financial Fortune. Watch till the end of this video to the signs of you are doing financially well. Do you believe you make more money than the average worker when you clock in each day? The median annual salary for a full-time worker in the United States was $52,000, or $1,421 per week, as reported by the Bureau of Labor Statistics. If you work a standard 40-hour week, it works out to nearly $26 an hour before taxes. Keep in mind, though, that this is an individual's income, not the combined earnings of everyone who resides in the same dwelling, such as a married couple and their children. New data from the Federal Reserve shows that the average retirement nest egg is around $65,000. All age groups are included in this total, however only those with retirement funds are counted. A safe withdrawal rate of 4% would only generate $2,600 per year in retirement income, yet over a quarter of Americans don't even have one. Individuals under the age of 25 had a median retirement account balance of $1,786. Those between the ages of 25 and 34 had a median balance of $14,060, and those over the age of 65 had a median balance of $87,060. These low estimates are worrisome because the typical American family will require more like $500,000 or more. If you invest even a tiny portion of each paycheck over the course of your working life, you will be in a far better position than the average person your age and will be able to retire comfortably, without having to rely on any other sources of income. The average Social Security retirement payment is $1,560 per month, according to the Social Security Administration. For many Americans, Social Security is their only source of income in retirement, and those who haven't saved anything else will need to supplement their Social Security with income from a job. It's important to remember that the average payment is only $1,500 per month, and that people who have never earned much money would receive significantly less than that. Some, however, view their Social Security benefits only as a bonus and make no provisions for them in their retirement planning. Furthermore, the benefit amount changes depending on your anticipated retirement age. The Social Security Administration's website is a good place to receive a ballpark figure for one's benefit, based on one's historical wages. According to data compiled by the U.S. Department of Labor Statistics, the typical American family spends $5,577 per month, or $67,000 annually. To cover this amount, your household income must be at least $72,000. This minimum amount includes the essentials, including housing, transportation, and food, which often consume a sizable portion of the average household's income. More specifically, the average family spends $1,885 monthly on housing, or 34% of total spending, $691 monthly on food, and $913 monthly on transportation. Credit scores range widely from as low as 300 to as high as 850, with the average FICO score surprising being 715. Experian claims that most people will profit considerably from having a strong credit score, despite the fact that some people discount the importance for such a figure. Your credit score affects the interest rate you'll pay on a mortgage for a home or rental property, the interest rate you'll pay on a car loan, and the conditions you'll get on other types of unsecured loans. Paying your bills on time is the single most important factor in maintaining a healthy credit score, so you'll be happy to hear that it's not hard to keep this one up. The length of your credit history, the different types of credit you have, the amount of new credit you have applied for, and your credit utilization ratio all play a role in your credit score, but payment history is the most important component. According on data collected by Wallet Hub, the typical American family owes $9,260 in credit card debt, making it the most dangerous kind of consumer debt. The sky-high interest rates associated with credit card debt are a major drawback. Credit card interest rates of 15%, 20%, or 25% are significantly higher than the average return on stock market investments. This works in direct opposition to any savings for retirement you may be making. And since credit cards encourage frivolous spending, a large portion of your debt is likely the consequence of unnecessary purchases like expensive jewelry or designer clothing. The majority of this debt was probably spent on low-value products like electronics, minor appliances, and impulsive online purchases. Paying off your amount in full each month, not making purchases that you can't afford, or using a debit card only will easily avoid this problem. Maintaining a record of your net worth allows you to clearly observe your financial growth over time. Your net worth is a great indicator of your financial health and can help you spot areas of improvement. To determine one's net worth, one must add up all of one's assets, such as a home, car, and retirement funds, and subtract all of one's liabilities, such as a mortgage. The Federal Reserve estimates that the median net worth for households in the United States is around $122,000, which may come as a surprise to those under the age of 35. For those between the ages of 35 and 44, the median net worth is less than $14,000. For those between the ages of 55 and 64, the median net worth is $91,000. If you're between the ages of 45 and 54, you'll pay $168,000. From 55 to 64, $212,000, and from 65 to 74, $266,000. If you have a decent income and exercise self-control, you can easily surpass these net worth estimates. Information gathered by the U.S. Bureau of Economic Analysis shows that the average savings rate is around 6%, indicating that people save about 6% of their income after taxes. This amount varies from year to year based on many factors such as the economy. After meeting all short- and medium-term savings goals, this money could be put away for a big-ticket item like a house, a car, retirement, or an unexpected emergency. There won't be much of a nest egg left over for old age. The typical down payment on a home is $62,000. The typical cost of a kitchen remodel is $26,000, and the typical cost of a new car is $47,000. A substantial portion of one's salary, at least 10 to 15%, according to the experts, should be set up for retirement. In addition to saving for retirement, you should set aside money for other future expenses. You'd like to make everyone retire early so they don't have to spend so much time working, but the average retirement age is 61, according to Ramsey Solutions, when most people don't even earn their full Social Security payments until age 67. To put that in perspective, the average lifespan for a person who reaches 65 years old is between 19 and 21.5 years. To qualify for full Social Security benefits, you need to have worked for at least 4 decades before retiring in your early 60s. There is plenty of time to earn compound interest if you start investing early, but will you have enough time to accomplish the activities you enjoy after you retire at age 61? There's a good shot that you'll be in good health and able to move around freely, but how much longer do you anticipate being in peak physical condition to pursue your passions? Some days it feels like you're not even getting close to where you should be financially, and other days you feel like you're making some progress but not quite enough. You can learn a lot about where you are financially by comparing yourself to the average American, whose numbers below will likely surprise you. Realizing that you're already ahead of the curve might be a great motivator for further development. That's it for today's video. We would really appreciate it if you could share your comments in the comment box, which can be found below. Until our next video.